who's going to realize that loss? If we're entering the future with a hole in our balance sheet of time and energy, whose time and energy is going to pay that back? In theory, they can't print any more land. Does that mean they can't print any more real estate? No, of course. I mean, I'm sitting here in New York City. They could build pretty high buildings, but like, I don't know, I'm kind of close. Bitcoin is the only instrument in your portfolio that we humans created to solve this exact problem. So why does Wall Street want it? I have been more performant than Ken Griffin for 10 years. That's why they want it. People aren't stupid, right? You either have to work 10 times as hard to outperform a Bitcoin holder, or you just own Bitcoin. During the end of the geopolitical setup that we have today, my favorite way to think about it is through global debt to GDP. So I think of money as our time and energy in an abstracted form. What I mean by that is, you do this podcast, in exchange for this podcast, you get money, right? I work on strike. In exchange for that, I get money. So my collective contributions to society and what I wake up and do every day, I get money. So money's an abstraction of our time and energy. I think governments being able to borrow their own currency is as close to time travel as we've ever come to.
Jack Mallers is the CEO of Strike, a leading fintech company dedicated to transforming payments and financial transactions using Bitcoin. Jack views Bitcoin as a bridge to address the long-standing issues of government borrowing, currency devaluation, and currency printing. To Jack, money represents the economy and time energy of individuals. With governments continually borrowing and accumulating debt, this diminishes the economy and time energy available to citizens in relation to the global debt to GDP ratio. As of 2022, statistics indicate that the national debt of the United States was approximately 120.03% of its gross domestic product, GDP. As we bring you clips from the podcast, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comment section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you and enjoy the video.
And what I mean by that is that I'm effectively allowed to borrow the time and energy from the future, right? So if money is our abstracted time and energy, and as a government, I have my own currency that I can borrow against, that means I'm borrowing time and energy from the future. And so when I look at global debt to GDP at something well over 300%, that means that they've borrowed a lot of time and energy from our future with no growth to pay it back. And that's a huge problem, and that loss has to be realized. And I'm not a macroeconomist. I don't have a college degree. That's as simple as I think about it. I think it's helpful to think about money in the form of time and energy, because then it becomes real. People are always like, well, why don't you carry the debt forward? Why don't you print the money? It's like, well, no. It's not a piece of paper. It's all of our time, energy, our contributions to this world, all of our lives. And so who's going to realize that loss? If we're entering the future with a hole in our balance sheet of time and energy, whose time and energy is going to pay that back? And I think they have two options. Either they can let the banking system fail, the bond market fail, and that's whose time and energy will be making us all whole. So Jamie Dimon's time and energy, all the bondholders' time and energy, all the banking system's time and energy, or they have to debase the currency. Market is now starting to lean towards the fact that they're going to weaken the currency to make whole on the time and energy they borrowed that they can't pay back. So that is how I think about it. That is why I think it's terrifying as an investor. And then that's why I think Bitcoin is the best thing you can own.
Why Bitcoin over those other assets, do you think, specifically now Wall Street?
Oh, I think it's the best expression of fiat debasement. It is the antithesis of fiat currency. It has no central bank. It has no government. Its monetary policy is fixed. Its supply is capped. It's everything that fiat isn't. And so if your problem is fiat debasement, then it's best expressed through Bitcoin. So you're taking the opposite. It's a put option on the existing system. It's long vol, right? Like, I don't know, I'm talking trader speak, but that's what you want. And traditionally you try and find that through something, right? Gold. Here's this collection of chemicals that like kind of gets me close. Real estate. In theory, they can't print any more land. Does that mean they can't print any more real estate? No, of course. I mean, I'm sitting here in fucking New York City. They could build pretty high buildings, but like, I don't know, I'm kind of close. Bitcoin is the only instrument in your portfolio that we humans created to solve this exact problem. Everyone has their own interpretation of the white paper, but I mean, come on, give me a break. Satoshi, right after 0809, created it and said, central bankers, I can't trust them. And so this is the best expression of the problem at hand. And so, and in more plain speak, what that means is that it goes up the most. So for those that, need to put two and two together, that means it's going to be the most performant. So why does Wall Street want it? I have been more performant than Ken Griffin for 10 years. That's why they want it. People aren't stupid, right? You either have to work 10 times as hard to outperform a Bitcoin holder, or you just own Bitcoin. I think we're still so early in the Bitcoin story. I'm public on record saying I think Bitcoin hits 250 to a million in this cycle. So now I'm speaking the next like 10 to 18 months.
Why do you think it's going to go up so fast, so high?
So I think it's the best expression of currency debasement.
Currency debasement occurs when the value of a currency is reduced, often by increasing the money supply. This can be a result of government policy or economic conditions, and it typically leads to inflation, where prices rise because the currency's purchasing power declines. Global examples of currency debasement. Ancient Rome, the Roman government reduced the silver content in the denarius coin by mixing in cheaper metals. This allowed them to produce more coins, but led to inflation as people realized the coins were worth less. Weimar Germany. After World War I, Germany printed large amounts of money to pay off debts, leading to hyperinflation. Prices doubled every few days, and people needed wheelbarrows of money for basic purchases. Modern Venezuela. Government policies in Venezuela led to severe currency debasement. The government printed large amounts of money, resulting in hyperinflation and making the bolivar nearly worthless. People resorted to bartering or using foreign currencies. Currency debasement consequences. Loss of purchasing power. Money buys less as prices rise. Erosion of savings. Savings lose value rapidly. Economic instability. Hyperinflation can lead to economic collapse, business closures and unemployment, social unrest. Struggles to afford basic needs can lead to protests and revolutions. Essentially, Jack elaborates on how Bitcoin can address global inflation and currency problems, which underpins his prediction that Bitcoin could reach $250,000 to $1 million. Let's get back to the video.
I think it's the best expression of the problem at hand, right? So it's a mirror. Bitcoin's a mirror. I look in the mirror, what do I see? Some ugly, fucked up shit. That's why. And so I think it's going to reflect the issues. And that's the reason Wall Street wants all these ETFs too, is Bitcoin is the only free market in the world. It's the only like pure human. It's volatile. It reacts to the world we actually live in. It makes moves. It makes noise. It makes stories. It makes headlines. And that's life. And that's why they want that. I mean, banks are making money on these ETFs. They're not making money owning bonds. And so I think for all of those reasons, it will directly reflect the world that we're living in today. And I think that world's very, very banged up. I think central banks have gone through progressively trying to price fix markets to keep everything together. And what market is up next? The all mother of all markets, the bond market, the sovereign debt market. And so how much money is that? We're looking at the dollar yen swap line that just opened. How if the US government, if the Treasury is going to be giving unlimited dollars to Japan and China to protect their currencies, you're going to get 2-3 COVIDs in this cycle as far as stimulus and printing. People are too fixated on the cost of capital as far as rates. They need to be more fixated on the amount of capital, which is they're still printing dollars. It doesn't matter that rates are at 5.5%. It's still inflationary. And so for those reasons, I think, how am I supposed to predict the most fixed asset in the history of mankind against the biggest fucked up problem that central banks have ever had to try and solve? Come on, 250 to a million. I feel super confident about that. Not getting the growth that the government is producing with the capital you're lending them. They're not paying you the full growth of the economy. The economy's growing 10% or whatever. They're paying you 5%. It's like, well, I'm going to go put my capital to where I can realize the growth that's actually happening in something like Bitcoin. Why would I lend you the money? You're giving me half. You should only be spending on things that you can afford through my taxes, and you're debasing the currency. So you want to debase the currency, tax the living shit out of me and not pay me in full when I lend you money, fuck off. And so therein lies the problem. Here comes this industry where like these guys, traders want volatility. Traders want life. There's natural entropy in the universe, and central banks try and control it and suffocate it. And here comes a totally independent market that has you feel alive being part of this industry. And so, yeah, that's why I think banks and Wall Street wants to be in the business of, so they're like Strike, they're in the business of financial services in the space. And then why would you want to own it? Is because it's in the direct reflection of all the problems. It's taking the other side of the fact that governments have borrowed so much from our future with no way to pay it back. Owning Bitcoin to me is saying, I don't know how you guys are going to solve this one, but it's not going to be my time and energy. There's a reason. The same thing that is in theory being manipulated by derivative markets and, the CME and all these big exchanges shorting gold without having physical. That's the same thing that was concentrated enough for the US government to create fiat. If gold was good enough, I wouldn't be born into the dollar system we are today. So, part of my childhood being fucked up and being debased in constant American war is the fact that gold wasn't sufficient enough to solve the world's monetary problems. So don't give me a history lesson on gold. I mean, this is the reason Satoshi built a better one. It's just, so I don't think that these are problems at all. And I think the fact that Larry Fink is a Bitcoiner and Jamie Dimon, whether he wants to admit it or not, is a Bitcoiner, according to his revenues and growth and activity and reports, that's a good thing for, everything's good for Bitcoin, right? That's what I think wholeheartedly. Every single thing is good for Bitcoin.
Is an Ethereum ETF good for Bitcoin?
I think it's more funny than it is good. I think it's so funny that, let's like walk through the game theory flywheel of we're rapidly debasing the currency. That's causing inflation. So we're going now 2020 COVID. We're debasing the currency. We have rates at zero. That's causing inflation. Inflation causes us to rise rates faster than we've ever risen them before. That causes bonds to fall. That causes banks to become insolvent, which causes the market, Wall Street, banks, like, where can we find some activity? Where can we find some life? Which causes all of a sudden, and a fear for future debasement, which causes Bitcoin ETF approval, which causes them to have the most successful financial product they've ever had, which causes them to go, you know what, Gensler, you're not in charge anymore. I'm in charge. How many of these pieces of shit do they want ETFs for? We're accepting all of them. So all of a sudden you go Dimon going from a Bitcoin skeptic to a cheerleader. And now you've got both political parties supporting Bitcoin. You've got Wall Street supporting Bitcoin. You've got Jamie Dimon's lip service, bad boy Dimon. He's supporting Bitcoin. And that's the game theory of what I think is something that's just so pure human. It's a free market. It's honest. It's integral. And that is what, at the end of the day, you can try and fight natural human behavior all you want. We all land in the same place. We all land on hard money, integrity, ethics, morality, global love, freedom. Those are all things Bitcoin represents.
That concludes our video for today, featuring Jack Mallers' insights on how Bitcoin could revolutionize the U.S. economy and indeed the global economy. He explored the potential for Bitcoin's value to rise to between $250,000 and $1 million. What are your thoughts on Jack's bold predictions and his analysis of currency debasement? Do you agree that Bitcoin is the ultimate solution? Hope you got some value from the video. Please share your comments and observations in the section below. Don't forget to subscribe to our channel and give this video a thumbs up. Thanks for watching.